Major stocks in Asia were mixed on Wednesday ahead of the U.S. Federal Reserve's interest rate decision and amid the lingering trade-related uncertainty as Sunday inches closer when more tariffs on Chinese exports to the U.S. are set to kick in. There were reports that the U.S. plans to delay slapping China with additional tariffs as both sides try to work out the agreement. The Shanghai Composite was up 0.24%, Hong Kong Hang Seng Index rose about 0.8%. In Japan, the Nikkei 225 slipped marginally to close at 23,391.86, while South Korea's Kospi closed 0.36% higher. Australia's S&P ASX 200 rose 0.68%. MSCI's broadest index of Asia-Pacific shares outside Japan was up 0.51%. European stocks traded in a mixed and cautious manner on Wednesday as investors awaited the Fed's decision and monitored further developments on the U.S.-China trade front. The Stocks Europe 600 index slipped 0.2%, Germany's DAX 30 index inched up 0.1%, while the French CAC 40 fell 0.2%. The FTSE 100 index was off 0.2% as well. The UK index trimmed earlier gains as the pound recovered from a sharp fall after a YouGov poll showed the Conservative Party's projected lead slipping in the upcoming election. As for individual stocks, shares of Credit Suisse fell 0.4% on the news that the Swiss bank would launch share buybacks of up to $1.5 billion in 2020 and targeted around 10% for a return on tangible equity. Meanwhile, Inditex rose nearly 3% after the Spanish retailer reported a rise in 9-month net profit and backed its full-year view for a comparable sales growth of 4% to 6% for the fiscal year. U.S. stocks closed slightly higher Wednesday as investors digested a cautious message from the Federal Reserve. As widely expected, the Fed announced it was holding interest rates steady, but added that it expected to make no changes in either direction throughout 2020. On the data front, U.S. inflation was slightly higher than expected in November. The Consumer Price Index was up 0.3%, higher than the consensus of 0.2%, and was up 2.1% compared to a year ago, the highest reading since last November. Against this backdrop, the Dow Jones Industrial Average rose 0.11%, the S&P 500 Index closed 0.29% higher, the Nasdaq Composite Index rose 0.44% to 8,654.05. As for stocks, shares of state-backed Saudi Aramco gained 10% on its first day of trading in Riyadh, making it the world's largest initial public offering and the most highly valued company in the world. Home Depot lost around 2% after the company set its targets for fiscal 2020, saying it expects sales growth between 3.5% and 4% and comparable sales growth between 3.5% and 4%. In currencies, the US dollar index was down 0.3% at 97.12 against a basket of currency peers. The greenback accelerated to decline after a more dovish tone from the Federal Reserve. As a result, the Euro-US dollar jumped to early November highs at around 1.1144 and finished above 1.11. The USD-Japanese yen pair was rejected from daily highs at 108.76, down to 108.46, as the greenback once again failed to confirm a break above the 200 DMA at around 108.80. Oil prices fell to the lows around $63 after the Energy Information Administration reported a crude oil inventory build of 800,000 barrels for the first week of December. The EIA also reported decent builds in gasoline and distillate fuel inventories. As a reminder, the API's Tuesday report pointed to an unexpected build of more than 1.4 million barrels. Trade war worries and pessimism about global economic growth added to the negative sentiment. However, Brent managed to gradually recover and trimmed intraday losses to $63.80. Later in the day, oil market was helped by a weaker dollar after a more dovish tone from the Federal Reserve. That is all for today. Thank you so much for watching, and please click subscribe to always be in touch with the latest market news.